Of course, our first thought are with the people in the path of the hurricane, their safety and the lives that may be impacted. But, obviously, we're also looking at what this possible investor impact could be. The fact that this is looking to weaken a bit down to a tropical storm, what do you think that means for the oil market in the short term?
So I think in the short term, the fact that it's a tropical storm means that we won't see significant long-term production outages. I do think we will see some shut-ins from Mexico. The storm is scheduled to hit the Bay of Campeche sometime over the weekend. That is a major place where Mexico has several export terminals. There's a similar storm that followed this course in 2006, tropical storm Chris, and that caused Mexico to shut in production for 2 or 3 days. So we could see shut-ins in Mexico of around 800,000 barrels for about 2 or 3 days as a result of this tropical storm. Now, that is not going to have a long-term market impact and even not potentially a short-term market impact. You see these big impacts when production is shut in for over 2 weeks. So I think what Beryl really has done to the market, however, is send a wake-up call. As you mentioned in the lead-in, this is going to be a very active hurricane season, and this is the earliest Category 5 hurricane that has ever formed. So this kind of push and pull between, okay, this storm isn't going to have a production impact, but
Right.
wait, we have a very long hurricane season ahead of us. Let me cover some shorts. Let me buy some upside tail hedges because I don't want to be the one who didn't heed the warnings that came not only from the weather services, but from this early indication of how
Got
the
it.
season's going to play out.
So we're seeing movement in the actual oil market and also in the options market as people try to hedge their risk here a bit. I want to look further out. We're entering summer driving season. We're seeing some signs of production pickup back up in China, which also can be, a boost on demand for oil as well. How does this fact that we're going to see this, extraordinary, as NOAA called it, hurricane season, how does that impact the oil market longer term? And of course, we're seeing the OPEC cuts wind down later in the year.
So over the longer term, I think what this potentially does is tighten the market over the short term. And when OPEC starts to unwind their cuts at the back end of the year, maybe not have as a much of a pronounced impact driving prices lower, right? If we have summer driving season that's strong, third quarter, we're expecting the market to be in over a million barrel deficit throughout the third quarter. So if those inventories, which we expect to start to rebuild in the fourth quarter, are more depleted due to excessive storms, summer driving season being strong, China coming back from refinery maintenance season, all of those things, we will then see as OPEC has production to bring online, we don't see the market impact that the market is anticipating, which is that the market flips from a deficit to being oversupplied. So the longer term impact is it kind of shifts back where we start to see the market flip into being oversupplied from late fourth quarter into 2025. 2025, Frank, is kind of ugly for crude markets, even with storms, even with China. We're looking at demand growth of a million barrels a day approximately in 2025 and non-OPEC supply growth coming in closer to 1.5 million barrels a day. So OPEC Plus doesn't have a lot of room here. They're looking at the next several months of, fourth quarter where they can unwind cuts before they have to probably start thinking about cutting again in early 2025, just based on
Okay.
where balances are looking.